So a boost in vaccinations now is leading to a boost in consumer spending. But part of that increase is also reflected in those higher prices, with annual inflation rising above the Fed's 2% target. In fact, the Fed's favorite indicator says 4% now. So let's get reaction from all of this from market watcher Rebecca Walser and Wall Street Journal associate editor John Bussey. Rebecca, ladies first on this. Now, you have personal income that's grown up 0.1% month over month, but PCE was up 0.5% month over month. Classic inflation rising faster than wages. So at what point do you think the market then starts to worry about this, like really worry?
Well, I think that, the market is being told by the Fed right now that this is transitory and that it will pass, and that it's just a matter of, such high demand coming back from the pandemic and everybody being shut down, and that it's transitory. So the market so far is taking it as transitory. I think the bigger issue is that the 4% that we're talking about is exclusive of food and energy, which is really where people are really feeling it. You can look at the gas prices per gallon. You can see how much more it's taking to fill up your tank. You can see how much more it's costing to fill up your grocery cart. And you're saying, wow, this is a huge difference, and it really is making my dollar not stretch nearly as far. But the market so far is really listening to the Fed. And if you look at, our initial jobless claims numbers yesterday, the Fed is going to be encouraged to continue to be accommodative, which actually gives the market reassurance. And so far, we're not seeing the market really sort of panic on this.
So, John, I want to ask you, transitory. What is that term, transitory? If you ask the administration, it's this year. If you ask some district Fed presidents, it's next year. I mean, how do we define where this transitory is? The Intel chief, for example, is saying that we could see inflation through the Intel chief is saying the chip shortage is going to last till 2023, and the chip shortage, according to Goldman Sachs, could increase inflation 1 to 3%. So what's transitory?
Well, transitory is when an economy is getting back up off of its feet after having been essentially knocked down by the lockdowns last year, primarily. And you're going to see these bottlenecks continue to affect the economy. I think the Fed is looking at this and saying, okay, so the numbers that we're seeing now, 3.5% inflation in June, they're going to probably continue into the third and fourth quarters. But the expectation is that they drop down closer to 2%. In 2022. That would be comfortable for the Fed. And the Fed is saying, look, interest rate increase, not on the radar. Powell has said as much. Our reporter, Nick Timmerus, has a story on this in WSJ.com right now. The other question is when they stop buying mortgage bonds and treasuries to keep interest rates low. And that might be something that they begin to adjust toward the end of this year. They begin perhaps to taper. But right now, they're looking at these economic numbers, which are pretty good. I mean, the economy's growing. The consumer is spending, despite the Delta variant, which could throw a real curveball into this. And the Fed saying, things are pretty much on course.
Yeah, but we're seeing this inflation in pretty much everything that we buy now, so that could change the perception. And that is a big problem for the Federal Reserve, Rebecca, isn't it? When you talk about perception, if people are now perceiving inflation is going to be higher, then it's going to be higher.
Yeah, I agree 100%. And I think that, the Fed is done its best that it's equipped to do to deal with an unprecedented event where the entire world, locked down and the economy was really shut down. And then different states started reopening on different schedules. And it's been very difficult for them to navigate these uncharted waters where they're having to figure out what is the right stimulus level. And do we start tapering? Because we have over 9 million job openings and people can start getting back out there now with the gene therapies that are available. And so, it's absolutely something that the Fed is going to have a hard time doing and getting just right. And we don't want people to start thinking that they have really lost purchasing power in real terms. And right now, if you go to the grocery store and you go to fill up your gas tank, people are feeling that. And so that is a little bit of a concern. And we do need the Fed to look at that.
Right. And Rebecca, I want to get your take on this. So, guys, I want to get your reaction. St. Louis Federal Reserve President James Bullard told me that he's worried about the housing market. Listen to this.
It's making me nervous that you've got this, incipient housing bubble. I don't think we're in that situation yet, but I don't think we want to feed into that situation with lower long-term yields coming from our asset purchase program. So that's one reason, I think a good reason to step away from asset purchases at this point.
Now, he's saying he's seeing a housing bubble starting. He's saying not as bad as the situation in the 2000s, but he says it's going that way, and he doesn't want to get the Federal Reserve behind the curve on this. So, now, Rebecca, I'll take this to you first. How do you protect your investments from a bubble like that?
I agree with him. I think that tapering is absolutely something that we need to look at. And we also see institutional money coming into real estate. We see a lot of real estate going up because people have really made some migratory changes since the virus and since the shutdown and being able to work remotely. But the last thing we want is a housing correction like we had with the Great Recession in 2007 to 2009. I don't think we're anywhere near that. That really took 5 years of selling BC paper on Wall Street to get to that. But we do need to be cognizant of the fact that real estate could be starting to get unaffordable for the average American. Right.
And quickly, John, with the last 30 seconds, I want you to weigh in on that too. What's your feeling on a bubble in housing?
Well, he's pointing out that the Fed is keeping interest rates low, which makes it easier to get a loan, which makes it easier for a lot of people to buy houses. And mind you, this is purchasing going on now that might have gone on in 2020, but people couldn't get out to buy houses. So a lot of this is a reflection of pent-up demand. The Fed says it's watching this, and it says it will probably start to kind of consider tapering toward the end of this year, but doesn't want to get out ahead of that. And it's now watching this Delta variant very closely. How much of that is going to constrain business and slow the economy organically as a result of concern, again, about the virus?
John, Rebecca, I appreciate it. Thank you very much for your comments on this. It's a long show. We could talk about this all day, but we've got to move on now.